Hi, I'm Tekoa Da Silva with Sprott Global Resources Investments, and I'm sitting down here once again today with Mr. Rick Rule, CEO of Sprott US Holdings. Rick, good to see you again.
Always a pleasure, Tekoa. Thank you.
I'd like to ask you today, Rick, about uranium. For the person that may be joining us for the first time, how would you characterize the uranium market, and what has your personal history been like in this commodity segment?
I can't resist the temptation to describe the uranium market as potentially explosive. I realize it's a bad pun, but if past is prologue, it's probably an accurate adjective. Uranium is a really interesting market for many reasons. It's a market that is driven both by incredible utility, that is, that uranium is the densest energy source known to man. At the same time, it's driven by intense emotion. If you describe a uranium investment to some investors, in fact many investors, the first thing that comes to their minds is not watts or volts, but rather Hiroshima, Nagasaki, 3 Mile Island, and more recently Fukushima. So it's an extremely volatile commodity and an extremely volatile market, probably the most volatile and cyclical of any market I know, which is why it's among my favorites.
What market forces, Rick, are the most important when you look at the uranium narrative?
Well, one of the most interesting, it's tough to figure out, it's tough to pick out one. One, however, is that in terms of generating nuclear power, the cost of uranium is almost irrelevant. Uranium feedstock costs often constitute 2 or 3 or 4% of the operating budget of a nuclear power plant. What that means is that after you've spent the $6 or $7 billion and 10 or 15 years involved in building and permitting a nuclear power plant, if the price of uranium is $20 a pound, you buy it. If the price of uranium is $50 a pound, you buy it. And if the price of uranium is $100 a pound, you buy it. The cost of uranium is almost irrelevant to a nuclear power plant after it's been built. The availability is what's the important thing. Many people talk about the fact that the prices of commodities have to go up to sustain the capital necessary to put them in production. But you have to look at the other equation too. That is, can the consumer, the ultimate consumer, afford to pay the higher price? And with regards to uranium, the answer is yes. Another thing that is unique about uranium relative to other commodities is what we discussed before. The efficiency as a power source relative to its weight or its volume. The important countries with regards to increasing uranium demand are countries like China, but more particularly Japan, Korea, Taiwan, and the United Arab Emirates, the most important of those being Japan. And in that sense, the energy density of uranium is extremely important. The Japanese have had a national political policy of energy security that goes all the way back to the trauma that they suffered during the Arab oil embargo of 1974. The consequence of that, which was extremely dislocating for the Japanese economy because they import all of their energy, was that they wanted to rely on energy sources so that they could survive another period of energy shortage. And for that, there is no commodity as efficient as uranium. Enough uranium to supply all of the electrical needs of Japan for 5 years can fit in a modest-sized warehouse. Imagine how much rain you would have to store to generate hydroelectric power, how much oil or gas or coal you would have to store. There is no other commodity in the world that can compete with uranium for efficiency in terms of yield as opposed to mass. So that makes uranium an extremely interesting commodity too.
Rick, globally we're seeing sort of a call toward maybe away from certain fossil fuel types, and environmentalism is maybe a big concern. How does nuclear power fit into that?
Well, it depends on how honest one wants to be with oneself. On the first instance, if something goes wrong with nuclear power, it goes really, really, really wrong. I'm not talking merely about nuclear war, although nuclear war is certainly an issue. One shouldn't, of course, confuse power generation with nuclear war. They're very different topics. But if something goes wrong on the generating side, we've seen that with, in particular, of course, Chernobyl and Fukushima, things can go really wrong. Things can go really right with nuclear power, too. As an example, there has never been a fatality involving nuclear power in the United States. Something certainly that can't be claimed by any other source of fuel, including wind and solar. The other thing that mitigates in uranium's favor from an environmental viewpoint is it is, of all of the baseload types of power, the one that emits the least carbon. The truth is that we're really having a different energy discussion in the world when we talk about alternative energies, because most of those energies are intermittent or inefficient as baseload power. As an example, solar power, were it to compete with uranium, would require 24 hours of sunshine a day, which is something that doesn't occur. Wind power, were it to compete with uranium as a source of carbon-free fossil fuel, would require that it always be windy. And in the absence of hot air emanating from a legislature, that's never the case anywhere. So the truth is, in terms of reliable, cheap, 24/7 carbon-free power, the consumer's choice is uranium, uranium, or uranium.
Rick, I want to ask you about the boom and bust cycle and where we might be in uranium. But before I get to that question, I want to quickly add in there, more recently we've seen some talk about refitting the world's vehicle fleet to be all electric. We're seeing this come out of some countries in the world today. When you see that kind of narrative, what goes through your mind in terms of where does the electricity come from to power all these cars?
Well, that brings up two or three topics. The first is that the pundits, seldom people who invest, by the way, more likely people who influence, are fond of making grand prognostications. And in my 40-year investment career, my experience has been that the net present value of most grand prognostications is zero. The truth is that fossil fuels, in particular oil and natural gas, are extraordinarily efficient, transportable, and dense forms of energy, and won't be replaced on a global basis in any application until they're gone. Will there be increasing adoption of electric vehicles? I hope so, and I think so. And then the question becomes, how, of course, will we generate that electricity? And interestingly, Tekoa, how will we store it, which is probably the subject of another discussion that you and I might have, because that has profound implications for things like copper, cobalt, lithium, nickel, a bunch of other things that you and I do for a living. But getting back to what you describe, the truth is that not only in transport, but in every aspect of human endeavor, we're using ever-increasing amounts of electricity. And when I say we, right now I'm talking about you and I, people who have the extraordinary good fortune to live in developed Western economies with access to the most abundant material inventory in the history of mankind. What's even more important to think about, both in terms of the future of man, but also in the context of demand for stuff, is that the world, the entire world, not just you and I, the entire world is growing rapidly more rich. And increases in disposable income at the bottom, not the top, of the demographic pyramid generate the largest demand for stuff and power. When people in Malawi raise their average household income, they don't buy what you and I buy. They don't buy stuff. We already have too much stuff. Our lives are improved by getting rid of our stuff. But when people at the bottom of the demographic pyramid get more money, they feed their family more calories, they switch out a thatch roof for a steel roof, And importantly, they electrify everything that they possibly can, not just vehicles. So demand for electricity, irrespective of the adoption of the electric vehicle, will mirror the ascent of man, both population growth, but more importantly, the better demographics that we're seeing around the world, particularly on the part of very, very poor people.
Rick, the boom and bust cycle in commodities, how does it work? Where might we be right now in uranium?
Well, uranium, it's interesting. I think it was Yogi Berra that said deja vu all over again. And here we are, the last uranium bull market, which occurred at the beginning part of the last decade, was, as I've told you personally, the most spectacular financial event of my life. I made more money in an absolute sense, way more money in a percentage sense, and I made it faster than in any other circumstance that I experienced. So if you see a smile on my face, it's because I deserve to have it. The circumstance that we saw then was eerily similar to the circumstance that we see now. On a global basis, the International Energy Agency believes that the fully loaded cost, including prior year's write-down and misallocated capital, to produce a pound of uranium is about $60 a pound. And yet, the market clearing price for uranium, as of this discussion, is about $20 a pound. So on a global basis, we make the stuff for 60 and we sell it for 20. We lose $40 a pound. And of course, being wise miners, we try and make it up on volume. Now, we're able to do this because we have a surplus of uranium that's a consequence of periods in time when there was very high margins to be had in uranium, and also from the extremely prudent idea on a global basis to turn some of the weapons-grade uranium that we threatened the existence of mankind with and downblend it and using it for running lights or recording interviews. I mean, two wonderful things. But the truth is that producing the stuff for 60 and selling it for 20 means that the industry is in liquidation. And at some point in time, even as overcapitalized a business as the power business on a global basis can't continue to earn negative 65% operating margins. And when that happens, if you combine that phenomenon with the phenomenon that we described earlier in this interview, which is the fact that the price of uranium is almost irrelevant as a function of the cost of producing electricity, that means, Tekoa, very simply that the price of uranium must go up, and it can go up. In my experience, if something must happen and can happen, it will happen. That's precisely what happened in the last bull market. Now, from the time I had that realization till the time I got paid, took 5 years. And those 5 years were very painful. I was rewarded for my genius with a steep decline in the share prices of the companies that I bought to implement my strategy until I was right. And if my memory serves me well, of the 5 uranium juniors that I owned at the bottom of the last cycle, the worst performer, the worst, gained 22 to 1. Now, will past be prologue in that regard? I don't think so. But if you cut my returns in half, I would still be delighted, and I suspect that's likely. It's interesting, Tekoa, as I age, with both investments and speculations, what I learn is that if I confine myself to questions where the answer must begin with when, not if, where the outcome is a certainty, those are good questions. Many speculators want to answer the if question, but in truth, they're trying to know the unknowable. And as Warren Buffett says, knowing the unknowable is an absolute waste of time. But if you confine yourself to questions where the payoff is very, very large, like the uranium equities trade, where the outcome is certain, where only time is uncertain, you have set yourself up with an attractive proposition that can only be screwed up by you yourself having irrational expectations with regards to time.
Rick, I want to ask you about how the investor and then, of course, how the speculator would position themselves if they wish to participate. But before moving on to that one, I want to ask one more there about the boom and bust cycle. So are we now in what I think I've heard you call a number of times the last man standing battle, where it's sort of the lowest cost producers that will be among the last to survive?
Yes, the lowest cost producer, and of course the state-assisted producers. There are some uranium companies that exist by stealing from taxpayers or multilateral institutions worldwide, and they may be the last men standing as a consequence of the fact that legislatures are usually dumber than boards of directors. But the truth is that you can only go on losing this amount of money for a fairly limited period of time. It always, in fact, impresses me how long that can go on. But we are, in fact, involved in the last man standing contest right now. And it will resolve itself. They do.
And it resolves itself by turning off the production button.
Exactly, exactly. What happens is that these, well, last time, of course, two things happened. Demand for uranium went up a bit, but supply fell apart. What I suspect will happen this year may be a replay of that. But the truth is that when you balance supply and demand by eliminating supply, you really set up distortions, because as the price moves up, even to levels that were previously economic, it takes so long and it takes so much money to restart supply that the industry can't respond to pricing signals, and you get spikes. To illustrate this, we should look back to the last bear market. At the bottom of the last bear market, the uranium price was about $8 a pound as opposed to 20 now. The incentive price in the market, I'm going back now to 2002, 2003, was probably $30 a pound, meaning that the industry needed $30 a pound to earn its cost of capital from operations in uranium. So they were making the stuff for $30 and selling it for $8. Couldn't continue. And it didn't. What was interesting was that when you shut down production, the price response wasn't to 30 or 40. It wasn't to the market clearing price before you eliminated capacity. In fact, the price spiked from $8 to $130 a pound before settling out at $85 a pound, a price that gave the industry very, very, very good margins pre-Fukushima when demand changed.
Because it's not as easy to turn on a mine as it is like a microwave or a toaster.
Very difficult to turn on a mine, in particular a uranium mine. Permitting any kind of mine is difficult, but permitting a uranium mine as a consequence of the negative perception that uranium enjoys, if that's the right phrase, and the focus of the legislature on popularity as opposed to science, turning on a uranium mine, just permitting a uranium mine can be particularly challenging. Uranium mines are also rightly held to very different standards, environmental standards, because of the potential lethality of the rock in concentrated form, not natural form. Regulators impose, rightly, a much more stringent set of restrictions. And developers impose on themselves a more stringent set of restrictions. And financiers impose on the developers a different set of restrictions. So while a normal mine might take 10 years or 12 years from conception to first pour, we've seen some uranium mines, Cigar Lake as an example, take 30 years.
All right, well, Rick, with that in mind, how does a speculator think about balancing the minimizing the cost of participation versus maximizing the speculative potential whenever a turn does occur?
Well, I think that for the speculator, you need to do two things. You need not to pick one horse. You need to pick 4 or 5 horses, because the odds against any individual effort succeeding are fairly high. You have political risk, you have project risk, you have financing risk, and you have longevity risk. Let's say, Tekoa, that from now until the blessed moment when uranium prices rise, let's say that there's a 3-year gap. One thing that you have to do is be prepared when you buy one of these speculations now to participate in a financing 18 months from now to keep it alive till the point when the uranium price runs. You probably would want to have a mix of political risk. In other words, you would probably want to have a company active in North America, active if you have the courage in the former Eastern Bloc, which has the lowest production costs in the world, and perhaps active in frontier markets. In other words, you probably want to diversify your political risk, because political risk in uranium is one of the paramount risks relative to other forms of natural resource investments. It's most important to Tekoa that speculators focus not merely on uranium, but also the management team surrounding uranium. One of the cruel ironies of the bull market, which followed the last bear market, is that from the bear market bottom, when the uranium price had to go up, there were only 5 companies in the world, only 5 juniors, that purported to be uranium companies. At the top of the last bull market, when the uranium price could only fall, there were 500 companies that purported to look for uranium, most of them run by people who couldn't have spelled uranium at the point in time that they should have been in it. But more importantly, there were probably 15 or 20 management teams that had survived the prior bear market, meaning that there were 15 or 20 groups of people who were adequately qualified to run a uranium company, yet there were 500 uranium companies. The speculators had to acquaint themselves with some very unpleasant math. The probability that their uranium junior had a good management team was a function of dividing the number of teams, 15, by the number of applicants, 500. The point of all this, rather than merely make people laugh about their own math skills, is to acquaint themselves with the fact that this is a highly specialized business. And the first thing that one must do when assessing the speculative appeal of uranium juniors is understand the competency of the management team with regard to the subject uranium in general, and then with specific regard to the task at hand. If somebody is trying to build a uranium company in frontier markets of Africa, have they been successful in the past building a uranium company in frontier markets of Africa? In other words, have they been there and done that? If not, no thanks. If somebody is looking to operate producing uranium deposits in the United States, does the management team have experience, A, operating plants safely in a way that the regulators are comfortable with, and B, navigating the politics in the United States and individual states with regards to uranium production? You understand where I'm going? It isn't just an energy game. It isn't just about watts, kilowatts, and volts. It's a lot about people.
What about for the investor, Rick? An individual that likes the idea but is more interested in safety of principle and possibly an adequate rate of return?
Well, you and I are governed under a compliance regime that probably prohibits me from naming names. I would encourage people who are interested in the topic to talk to their global broker, and if they don't have one, by all means to get one. There are certainly 2 alternatives. A trust which trades in the United States and Canada, which owns physical uranium, which is probably the lowest risk way of playing the game. You've heard me say before with regards to these metals trusts, like our own Sprott trusts, that if you believe the price of the commodity is going to go up, you start by buying the commodity. And then, of course, there is one multinational producer, which we can't name in the video, but of course our brokers will be happy to describe to anybody who is curious about the uranium game. There are a couple of investment-grade opportunities available for people who want to take advantage of the situation.
All right, well, Rick, going forward, what 1 or 2 things are you most interested in watching the market in uranium today?
I think what speculators have to view is the pace of Japanese restarts. The uranium market was in balance, although probably headed lower, because the operating margins were so high prior to Fukushima. And Fukushima really changed a lot of things. You took away 16 to 18 million pounds of annual demand in a 190 million pound market. In other words, you obliterated 10 or 12% of demand. But more importantly, because of the Japanese propensity for energy self-sufficiency, you took a lot of supply, perhaps 25% of the world's above ground supply, and you took away the need for it because you weren't going to turn it into power. And what happened is that you took off the market 16 to 18 million pounds of demand, and you added back onto the market about 90 million pounds of supply. If the Japanese nuclear industry is able to convince the Japanese people of the ultimate efficacy of nuclear power in Japan, the pace of Japanese restarts, the pace of the reutilization of the nuclear fleet in Japan will be the determinant as to when prices firm for uranium. If Japanese reactor restarts occur, when Japanese reactor restarts occur, two things happen. Supply increases and, demand increases, and existing supply comes off the market. That by itself, in conjunction with the incredible pace of Chinese new builds, will restore the market to a healthy set of circumstances and raise the price of uranium, in my own opinion, from its current $20 level to a market clearing price more like $60.
Rick, in wrapping up, is there anything you think we may have missed?
I don't think so. I think it's important for people to understand that this is a commodity where the price must go up and can go up and thus will go up, and that the price, the pace of market recovery will really be a function of Japanese restarts.
And if anyone out there wants to get in touch with you, is there a most convenient way to do that?
Probably by emailing us at a link which I'm sure that you will append to the end of this interview. Or of course you can always call us, yourself, myself, or any of the people here at Sprott at 800-477-7853. While I'm at it, Tekoa, I would urge the listeners to this interview to go to our website, www.sprottglobal. It's a resource in its own right that people don't understand. There was, at last count, about 200 hours of educational and instructional material on that website. And you know and I know that anybody who accesses that website will get their money's worth because all of that material is free.
All right, well, Rick Rule, CEO of Sprott US Holdings, thanks for sharing your comments with us.
Pleasure, Tekoa. Thank you for facilitating it.